Welcome back to Friday Flows. This is Jacob Milliken over at 9M Investments. So we're going to jump into it. Flows by asset class into the ETF universe. Fairly light week overall, only 3 billion coming into the ETFs, especially considered when 52 billion has come in for the year so far. On the week, though, equities taking in the lion's share, although fairly for a smaller week, that is still a big number on the fixed income side. Breaking it down from a sector area or sector group, fixed income, global equities have taken in the lion's share. And as you can see, for year to date, big numbers for global equities and fixed income. So kind of give you a view of here. North American equities have taken in the lion's share on the year, although you can see for the last week that actually came down a little bit. Global equities, actually Europe, global, outside of US, all have taken in big numbers for them, especially on a yearly compared to the other sectors on that. And again, that kind of makes sense. Asia, another one, global fixed income. Global tech, or not global, sorry, global and EM have been beat up over the last year or longer. I mean, EM is like 10 years. So, from a valuation standpoint, makes sense that people would start moving there. And, as you build out your portfolios and rebalancing portfolios, pretty much everybody is underweight in those areas. So, doesn't completely surprise me that there would be some flows heading into international type funds. Breaking it down to the week on the individual names that did well and didn't do well from a flow standpoint. I'm going to start at the bottom here. The SPY, the biggest one in the universe, 6.5 billion flowing out. So again, people taking risk off the table. SPY always kind of leads just essentially because it is the largest fund. Otherwise, where people were pulling money from was really from bond funds. A lot of these treasury bonds, T-bills, another one here, another treasury bond. So people going from short-term safety to, Invesco. And so now, not that they're all moving directly to Invesco, but Invesco is kind of the bargainer of risk. And so when there's flows flowing into Invesco, that kind of makes sense that it would be coming from T-bills, from safety, if you will. Overall, kind of again, a not huge numbers for inflow for a rough a week. 1.4 billion is a large number, but Invesco, that's a huge fund that comes in and out, and you'll see flows over a billion one way or the other from out to in with a QQQ. Another interesting one this week is the SQ, which again, Invesco has gone up about 8% so far in the year. SQ investors are betting that is going to go the other direction. That was maybe a false move up. So huge flows into that. Now, are they going to be right or wrong? We'll see what happens. Other than that, really kind of value dividend equities or kind of where people are putting the fund. Again, I'll highlight JEPI again. That's another one that's been very consistent. And again, full disclosure, that is something I use in my portfolios as well. So overall in the week, again, just kind of a slower week as far as flows go. People moving from safety, treasury type funds into, I don't want to say back into tech because there is some tech with the QQQ, but it does really seem that people are moving into more value, more income-based equities that have that dividend built into the fund. So again, doesn't completely surprise me based on what we've gone through and what typically does well in rising interest rates. Those types of stocks typically do well. So people flowing into those types of funds, really not that surprising. So anyway, I hope this was helpful. I will talk to you next week, and y'all have a great weekend. All right.